let's get someone onto the show who actually bought 10,000 shares of Nubank last Friday. And he kind of didn't care. He just bought it. He also sold like 250 grand worth of puts on Hood at 45. Didn't care, because this is a guy who sells calls, sells puts, and collects premiums. Ladies and gentlemen, TJ, the Wheel Deal. TJ, what's up?
What's up, Amit? How are you?
I'm doing very well, sir. How's your Friday going?
I'm doing well. I got the little microphone over here. Am I good on the volume?
You're perfect. You are perfect.
Awesome, dude. I'm good, man. I'm good. I'm feel really blessed, man. You know, it's like you said, I sell puts, I sell calls, I collect premium. I roll when it makes dollars and cents, and I'm not stressed out every day by, market fluctuations.
And it's nice to be up a down payment on a house in a day.
Oh yeah, I guess so. Yeah.
It's nice. It's not too bad, right? It's not too bad.
Yeah. It's crazy. It's just very, up, down, up, down, up, down, but eventually, up and to the right if you're in the right equities.
So before we get into it, guys, this is TJ the Wheel Deal. I'm putting his Twitter in the chat for those that don't know him, so you can follow him right now. For those that are new to the channel, TJ and I have had a thing going basically for 11 months where we look at TJ's portfolio, and he wheels, meaning he sells puts, sells calls, collects premium. And we manage about together $1 million out of his 12 million, and we deploy it against different plays. But overall, he just talks through his philosophy, talks through his analysis. And for everyone else who's trying to get into wheeling as a business or even as something as side income, I think because he's working with a little bit of a bigger portfolio, he's able to go through some scenarios that helps us understand how he's navigating the markets. So I guess let's get started, TJ.
Awesome. Well, I think that we should start with that Nubank, since Chris Patel was just on here. So there's a couple of reasons I pulled the trigger on this without offering a lot of resistance last week. One is because my wife took 3 economics classes with David Velez, the CEO of Nubank at Stanford University. So she's been telling me about this company since I started in the stock market. Full time, managing the family's money as well as my own. And she was like, there's this guy, David's real good dude. And, comes from a real well-to-do family. And he's got this company that he created, and it's doing really well. They recently took it public. They're doing some things in Latin America and whatnot. And it's just growing, it's growing like hand over fist. And so she was like giving me the fucking lowdown on it, right?
Right.
So then I go through her LinkedIn, and she was showing me some messages between her and David, and there was a little too congratulatory for me. It was like, oh my God, congratulations on your success, David. Oh my God, I'm so proud of you, and all this bullshit, right? And as a man, as her fiance at the time, I'm like, dude, are y'all boning or what? Like, I was very, very insecure, and I didn't like the guy, and he was too good looking for my taste. And she was like, no, he's actually real short. He's not that good looking. And besides, I was going out with Mike, one of the captains of the football team at the time, so he wasn't my style. And I'm like, okay, so what you're telling me is you're with the nerd, you were with the freaking jock. I'm like, I hate you even more right now. So this situation was not going well for TJ. But anyway, I looked into the company, dude, and it was legit. They were growing. They're very, very profitable. And I feel like their TAM is bigger than SoFi's, like right now. You know what I mean? Because they've got people that don't have access to banking over there in Latin America and stuff. And then Chandler started covering these guys a couple of years ago, and I looked into it even more. The reason I didn't pull the trigger was 2 reasons. One is because I legit didn't like how friendly Kristen was towards David, and vice versa in the LinkedIn chats or whatever, the DMs. And then their premium sucked on the options chain, so that made it easier for me to justify that I was going to rock with SoFi.
Did she ever tell you when the stock was like $4 or $5 to get into it? Did she ever say?
She's been telling me to be in Nubank instead of SoFi the whole time.
Wow.
Yeah, dude, my wife knows stocks and like from a different level, right? Like knows companies and stuff. She just knows how to. It's just so obvious to her. Just like whenever I was in Enphase, she was like, "This is in Vegas." She was like, "Why aren't you selling Enphase? We have Tesla. We don't even need this shit."
Yeah.
like, baby, I'm going to go put money on black right now. Like, shut up. We'll deal with the stock market later. You're still on the vibe. It's Smith's birthday, right? He was literally giving me this chat whenever we're coming down the elevator to go meet with you guys to go gamble at the Aria. It's just like, why are you even in Enphase? We have Tesla. We don't need this shit. That was her quote. And bro, I still hear that shit to this day. So, it's one of those things. So she looks at this at a different level. She's always studying the CEOs and stuff because of her connections with Stanford. So she knows who's doing who and why they're doing it and what kind of success they're having. The venture capital firms that help get them to the promised land. Like, she gets into that kind of stuff. Yeah. Because there's some people that don't fail, bro. It's like, that's why I always look at like, what's BlackRock doing? They don't really have a history of losing a lot of money here. So people follow different trends and stuff, and that's what Kristen's into. She's always into the gossip of the people that are actually really moving the needles.
So let me take a little bit of a bet. First, can you scroll down on the 10,000 shares? I'm gonna take a bet. Oh, I was right. I didn't even have to say it. I had a feeling you put these bad boys up for sale.
Oh, for
sure. You collect calls.
Yeah.
Or you collect premium. Mm-hmm. And there you go. Okay, so what's the logic? April 17th, $13. What is the logic there?
The logic is that I've just been studying the charts a little bit, right? And I was like, Nubank is they're dealing with some macro pressure in Latin America. First of all, so Nubank doesn't have all the tailwinds like Chris Patel might be talking about right now. Like, there's a reason that this stock isn't like absolutely moonshotting. And Tanner and data-driven investing and stuff talk about these kinds of things, like what's going on in Brazil and Mexico and all that stuff with this company. So I just feel like they're not going to go to like $20 a share right now. So I wanted to collect some rent. And it is a very high conviction play from the standpoint that I know it's going to make money, but it's also a very low, I don't give a shit play from the standpoint of like, I don't even give a shit if it's in the portfolio ever, because I'm a SoFi guy. So I'm like, if I could make a few bucks with this thing, if I could write it up and not screw it up too bad on cover calls and write this thing up to $20, cool. I'm excited about it, but I also don't have any FOMO whatsoever because I feel like any money that I could make on Nubank, I could make it just as easily on SoFi because I understand the company a lot better. I understand how it moves, etc. And I think that something that Chris Patel said is very, very critical. He understands Nubank. He understands where they're going and their company culture and all that stuff. So it works for him. So in other words, I think what he's telling you guys indirectly is I know how to make money with this company too. And my whole thing with SoFi is like, well, I know how to make money with SoFi. So I stay in my lane. And that's why I feel like not every investment is for everybody.
Right. That's fair. So so how much premium did we get on those? 10,000.
It was decent. It was 3,000 on the initial. I initially put these up for sale at $12. That didn't work. And then I rolled them and I got another 1,000. So I've collected like 4,000 in premium so far. And now I'm sitting pretty, chilling out 13. And this thing's at 14. Cool. I'll manage it from behind. And right now, the idea, I put it in the journal real quick. I want to sell these shares at $24, 22 to $24 and get a nice clean double on them. Manage them along the way. I think it'll take probably 18 months to get there, would be my best guess. So I don't think that this is a moonshot thing, but this is steady, dude. And this could be a long-term thing. So it's kind of like when we started with Hood, where I'm kind of like just real indifferent about it.
Yeah.
But now I'm actually going to listen to an earnings report because I haven't even done any of that stuff.
Right.
So I'm actually going to go back and listen to 4 earnings reports so that I can see, okay, story numbers. Where's the connects? Where's the disconnects, right? In my mind, because I like to piece it all together that way. So it's kind of like, to me, researching a stock for the first time where you're really going to research it. It's a lot like you're going to watch a series on Netflix. You got to start from season 1 and then get up to speed. And then you're going to start seeing a lot of correlations, right? And that's what I like to do with earnings reports. So I kind of like that this company's been around for a hot minute. And now I'm going to be able to go back 4, 5, 6 earnings reports, listen to those and see the story that they gave us and then the numbers and the story and the numbers and see what jived and what didn't jive, why they didn't hit certain metrics, why they did hit certain metrics. Because now I can binge it, right? I can binge it because there's a lot of information out there.
Right.
And that is what a lot of investors do strategically. Like they won't get in companies too early because they want that track record. They're like, dude, I mean, if this thing's really going to be around for the next 10 or 15 years, does this first move up the ladder, does it even really matter?
Right.
And I'm going to take a direct quote from Ryan Serhant, $1 Million Listing. I had a pleasure of meeting him a couple of times. I don't know if y'all are familiar with him. He does Owning Manhattan now.
Yeah, he's huge.
Whenever you're buying real estate or you're buying anything, everything feels expensive initially. You have to have the mindset of, is it going to feel expensive 2 to 5 or 10 years from now? Because whatever the hell you're paying for that apartment or that condo or that home right now always feels expensive on day one. When you make the purchase, it always feels expensive when you're the consumer. But if you look at it from an investment perspective and you're able to fast forward in your mind 3 to 5 to 10 years from now, you might be getting the steal of the century, so to speak.
Right.
And that's kind of the way that I look at stocks sometimes. That's why I don't get so damn enamored with trying to buy the bottom or anything like that. I'm like, am I really going to give a shit 3 to 5 years from now? But I truly think this thing's going up and to the right. So It's like, it's the invest and then investigate mentality with Stanley Druckenmiller.
Yeah.
So that's where I'm at. Haven't investigated much. I'm just leaning on, I know Tanner's super smart. Data Driven's covered this thing a little bit. I think Tevis has talked about it with Tanner. And then now Chris Patel's on the job role. I don't have to do anything. Like, I mean, this dude telling me we got a green light, bro. We got a green light. And that's the beautiful thing about having a network on these types of platforms. And you just trust these people because they're not in the business of trying to lose money.
Right.
So, yeah, this guy's good to go. I'm excited. I'm looking forward to learning more about it. And again, Kristen's put my mind at ease because I was just being a dude, right? Like, we were very early in our relationship. She's like, my God, first of all, he's not my type. He's too short. He's a little shorter than you. I'm like, well, baby, what are you even saying about me right now? Right?
Yeah, you're not that tall, dude. I'm a little taller than you. So,
bro, I claim 5'8". I think I'm like 5'7.5". So anyway, it's just one of those things, dude. The guy had a real good idea. He ran with it. He had the right financial backing. He had the right connections, political affiliations in his home country. And dude, they're crushing it. So good for them, good for them. And she's also familiar with the people that started our beloved SoFi.
Yeah, at Stanford. So
yeah, so I'm just.
Why don't we go to SoFi? Let's see how that position.
So I'm, again, I'm Team SoFi. Make no mistake about it. But at the same time, dude, it's hard to deny what this other company is doing in Nubank. So SoFi made a lot of money for me yesterday. Realized cash finally. So SoFi is trading at $18. Got an average cost of $7.25. There's 5 open strategies right now. All of the shares are for sale at $20 at the end of the month. You want to talk about that part right there?
Yeah. I mean, are you nervous about that? How are you resolving that?
No. I'll tell you why. Because this damn thing is up. How much in the last month? Yeah, 11 in the last week. 10%, 11%. So what does it got to do to get to $20? What is that? How many percentage is that? About like another 10, 12%?
12%, pretty much, yeah.
And then I got paid a little bit of money for doing this too, like 25 cents, I think, or so.
You think earnings is going to be a sell the news, essentially?
No, I think that it'll do well. But I also feel like it's a manageable situation, and it's very easy for me to roll these a month and put a $22 handle on there. And then now we got to talk about this thing that's very, very important to me, and that's called valuation. Like, people just look at these price targets and they don't take into consideration how many outstanding shares this company has. You got to multiply that, with the outstanding shares, you're going to create this market cap or whatever, right? Going to walk them through that math a bit. What kind of market cap does SoFi have at $20? What kind of market cap is it going to have at like $22? Because I could easily roll to $22. And I'm like, dude, are you really going to be able to justify that kind of market cap right now? We don't know yet. If they announce something crazy with Galileo and stuff, then we're going to feel like, holy shit, this thing's like super undervalued. But I feel like SoFi is maybe slightly undervalued. If you look at the metrics that Chris talks about from Data Driven, I think it's pretty fairly valued right here.
So at 22, SoFi would be a $23 billion company that would be fully profitable. Here's my question for you here. Do you think forget the valuation, do you think the narrative re-rating of the stock could be something that pushes it past your strike?
If the technological component really comes into play. But if you're just going to sit there and pound the table on things that we already know, that your lending business is great. Now, but they have a new wrinkle now where they're I don't exactly. Maybe you can talk to it more, right? Because I'm a very, like, I know about these companies generally because I'm not a librarian. That's not what I do. That is not my gift in the stock market. But they're signing business deals with other companies so that they can underwrite using their capital and stuff.
Yeah,
and they have a very profitable business segment now. So I guess that's under maybe financial services. I don't know where that falls under in their flywheel action or whatever you want to call it.
It's what most people are saying their loan platform differentiates them from just being a bank. It becomes a more of a tech company. My thing is just SoFi always pumps and dumps on earnings. I feel like given all the banks crushed, this would be the quarter for them to pump as well. But you're also fair. It's already up a lot in the past month. For it to go up another 12, 15% is just not going to be the easiest thing potentially.
Yeah, it's tough because I mean, I just look at that. When in doubt, zoom out. It's already up 23.5%. Are we saying it can go up another 23, 24 for yes? But I also have covered calls at $20. It'd be very manageable at 22, and I could roll and eventually get a $25 handle. I have a very hard time believing that SoFi is going to be able to say anything or do anything on this earnings call to justify like a $25 handle, because that's the level that it would have to go to before I would be like, holy shit, I'm really in trouble with these covered calls. Because if it goes to like 21 or 22, that's a very manageable situation still, just being realistic.
Yeah, and for those that don't know what a covered call is, again, SoFi's TJ is agreeing to sell his 150,000 shares at $20. He got paid a premium from people who bought 1,500 buys. 1,500 calls against those 1,500 shares or 150,000 shares. And if it goes above 20, he either can sell it or he can roll the contract, but he did make quite a bit of premium for putting up those shares for sale.
Correct. And then the other thing that's got me feeling a little bit confident is that I also have now 1,400 long calls. So two things cannot be true. These covered calls cannot continue to be underwater on January the 31st, and these leaps not be printing money for me.
Right.
So if this is going to be a problem, if this is the pain, this is the gain. And that's why I always like to position myself, heads I win, tails you lose. So I'm not that stressed out about it, guys. Like, we are okay. And then here recently, I had 1,000 leaps that I had bought very recently on a downgrade of one analyst that, in my opinion, is not very good at this job. I'm not here to talk about people like that, but I mean, his track record speaks for itself. He's lower tier on the analyst, but somehow he was able to move the needle. And I had bought 1,000 leaps for June of 2026 after this downgrade a couple of weeks ago. And I was able to realize a profit of like $194,600 inside of about 20 days on leaps.
That was the KBW downgrade to $7, right? Yeah. That's when SoFi went to 1350, I think.
Yeah. So I loaded up on the leaps, and this dude has really, really made it easy for me because now I locked in some profits along the way, and now I'm just not stressed out about these guys right here. Now, if I had held on to these things, I could have made over $200,000 because I closed these out yesterday. But it was important for me to try to lock in that win because the IV is going to go down after this binary event.
Right.
So it was either gonna be close them out yesterday, close them out today, or potentially, even if SoFi does well, and you've been in this situation, Amit. You have been in this situation where you buy a call, the earnings were great, and then wealth coach Mac is like, hey, have you heard of this thing called Ivy Crush? And all of your dreams went up in smoke like a Cheech and Chong movie. What, you remember that? Because I remember that.
I remember that, correct.
You were like sitting here doing all your simulated returns and all this stuff, and this guy gave you a little, Greek knowledge real quickly, and you looked very dispirited.
I was like, Greek? Why are we talking about Poseidon? What the fuck's going on here? Like, where's my money, bro? It's the Greek god for money. Why are we talking about this?
So anyway, bottom line, I think I'm going to be okay. But at the same time, I'm okay with these things getting challenged because I feel like I picked a very manageable strike price on the cover calls at $20. Now, if you're not experienced and you're like, if you're of the mindset that, hey, if you sell these cover calls at these levels and you have to deliver the shares at those levels, if that is your mindset and you do not understand that there's a lot of flexibility and malleability when it comes to selling options, then I get it. This wouldn't be for you. But I know that these are not like the stone tablets with the 10 commandments or anything like that. This is a very fluid situation, and I can navigate the waters accordingly because I feel like a $20 strike price, it's almost like come and get the shares. They're right there. I welcome that because, we still got a lot of run up, right? It's 150,000 shares. So the position would be up a couple hundred, $250,000 more.
Yeah. And again, the fluidity that TJ's talking about is that because SoFi is such a liquid options market, if you want to roll the contract, which just means adding time to the contract and getting paid for that, or increasing your strike price and maybe paying a little bit or potentially getting paid for it, that you're not beholden to having to sell those shares at $20, even if that's the value of the contract.
Yeah, and what he's talking about, guys, is the volume right here. You see the open interest is 22,000. The volume is 5,300, and I'm talking about 1,500 contracts. So there's a lot of dance partners there. There's a lot a lot of liquidity. Not going to be losing a lot of money to slippage or anything like that. This is going to be a 1 cent increment. The bid and the ask, the bid will be 20, the ask will be 21, so to speak. So
and this is very important
for very liquid option.
Yeah, if you try to wheel a stock that doesn't have liquidity, you're not going to be able to generate premiums off of it.
Yeah.
So there has to be a real options market available for the stock. Okay, can we look at Hoodie?
Yeah, real quickly though, Amit, what do you think about me closing out those long calls and locking in the win? Because I did that because of historical reasons, because SoFi has dumped.
Wait, which exact, all of these long calls or which ones?
No, the 20 ones that I just did, the ones where I locked in the win after the
oh, you're asking my opinion on you getting the profits.
Yeah, so I locked in the profits so that because I have 1,400 more cover call contracts that I could sell right now. I could bring in 6 figures right now on SoFi, and I've thought about doing it, dude. I have thought about doing it. I've thought about like literally rolling the dice a little bit because, 6 figures is 6 figures, a lot of money to me too. And I thought about doing it at $21. That's a 22 delta. I have literally 14, or at this case, 1,200 contracts that I could sell.
And but the reason he's able to do this, guys, is because he has the leaps. So the leaps act as collateral.
Right. So there's another $46,000 that I could bring through the door if I wanted to stay at the $20 range, and I do 1,200 contracts. That's $71,000 that I could bring through the door by putting everything for sale, because I'm absolutely convinced that this is a very manageable situation, even if SoFi pumps, and I wanted to pump, because I'm not in a situation based on how the position is structured that I have to cheer against SoFi. See, whenever you're putting all of your eggs in that basket and you're extremely directional, and I've made those mistakes in the past, then it's counterintuitive because you find yourself cheering against the underlying when you sell a cover call. Right. I'm not in this position because I bought the insurance already. So I thought about selling these cover calls and bringing another $50,000, $60,000, $70,000 to the door, because then now that becomes a hedge against the dump, so to speak. Because I'm like, shit, man. First of all, the next round of cover calls is going to suck because SoFi tanked. The IV is gone, so the premiums are going to suck as well. And then what if Chris Patel and everybody else is right? This thing's just going to continue to dump because Galileo doesn't come to the table with anything to justify a hybrid multiple of sorts. I mean, everything's looking very sanguine and everybody's feeling very optimistic. But then you have people that really understand this business at a higher level than I do, like the Chris Patels of the world. And he's like, hey, let's pump the brakes a little bit. Let's pump the brakes a little bit, because this is what historically has happened with this particular stock. And this is why X, Y, and Z.
Okay, so 2 things. Number one, I think it's good that you took the profits on the $15 calls or the $20 calls, locked in those 6 figures, and not holding them into earnings. So that's good, right? Because earnings volatility, it's good to lock in that win before you get into that earnings. My question to you is, because you're so long SoFi and you want to hold SoFi and you have these calls at such a cheap strike at 5 or 7, what if you just sell them at a very high delta? Like, what if we go to like 25, where it's probably not going to happen, and even though you're not bringing in 40 grand, you're bringing in something, and at least you get something, right? Like, is that worth your time at all? Just from a mental perspective? What if SoFi does go nuclear, right?
And sure. Well, I guess just mathematically, it's because I really understand the role, right? And I understand that if I go from 20 to like 23 or 24, add 90 days to the contract, I'll do better than break even on the actual premiums. And now I have all this other capital appreciation that I'm qualified for. I think it's a calculated gamble to try to grab the bag on the premiums initially.
I think that's fair. The one caveat is if that crypto angle does come back to SoFi, I think it takes it to 25.
But I mean, is that a light switch that they can flip on though? Or
I don't know.
I'm just saying, like, I think that's where there's investing and then there's speculating, right? Because we're speculating that it is just literally that simple. You signed an executive order. Does that mean that it's all green lighted today, or is there a process? Like, I don't know government that well to understand, okay, cool. The guy's like, here, let me take a picture with my executive order, right? We've all seen those cheesy pictures. And it's like, okay, so what does that really mean? Like, what does that really mean?
I don't know, but I know in 2021 they had it. 2022 they took it away. So they took it away pretty quick. I feel like they could bring it back pretty quick. But I'm just saying the fact that that's out there and that you could be deeply underwater on what amounts to 300,000 shares.
But am I guess that's what I'm saying. I just feel like I don't feel there's a world, crypto or otherwise, Bitcoin moving to 200,000. Show me a world where SoFi should be worth over like $25 a share, because that's where it would have to go to before I would say, hey, these covered calls are now a pain in my ass to manage.
Yeah, but you're thinking about valuation, but this market, I mean, Palantir is not supposed to be valued at 200 billion. Rocket Lab, I don't know if it deserves it to go up 30% in a week, right? Like a lot of wonky
what happened because he said Mars on the thing. Is that why Rocket Labs is up? Because I have 20,000 shares of this thing at like $4, under $4. It's like 386 or something shit. Crazy. I've never sold a call on it. It's in an account that I don't sell options on because I'm doing experiments with my wealth, right? To see like buy, hold, and hope versus doing all this work, like what ultimately is better in a bull market. And right now, I'm only outperforming that portfolio by 7%. There's like a whole lot of work going on just to make an extra 7%, just so you guys know, because I like to compare apples to apples.
And my thing is SoFi might be getting re-rated. SoFi might be going through what Palantir, Robinhood, and Rocket Lab went through last year. And if that's the case, I don't know. That's just what I'm thinking. It's like, it's kind of scary to have all those shares up for sale, because what if this thing truly does become what everyone's thinking it could become, what you thought it could become for the past couple of years?
So re-rated. So you're telling me that a 152 price to earnings isn't already a pretty lofty valuation? I mean, I'm just saying, do people not look at these metrics? Like the people with the big money? I'm not talking about little minnows like you and I. I'm talking, or you and me, whatever's proper English. I'm talking about the people with like the real big money that are these algos. I'm sure you have to program these algos to do certain things. And I don't think it's just to go buy stocks at any levels. I think there's certain metrics that they have to adhere to.
Yeah, but TJ, Rocket Lab doesn't even have a PE. And it's up, it's up 800%. Like I'm just saying, maybe SoFi gets re-rated to such an extent. Maybe it doesn't. But if it does, and all the shares are up for sale, that's why I'm like, what if you go to 25, 26, you're only going to bring in 10 grand over 70 grand, but it's still 10 grand. And
can you pull this comment up by Jack K? Because that is just not true. 1001. If you have the S&P, let's just say you have the SPY and you're holding 100 shares, and you successfully sold covered calls against those shares and not had them called away, the premiums you had on top of the capital appreciation are always going to outperform if you know how to navigate covered calls. So that's not true unless you're just an idiot selling covered calls. Because what I do is I sell covered calls and cash secured puts on underlines that I already own. So I'm writing up the capital appreciation, and my cherry on top is always the premium. So I'm always going to outperform you because the capital appreciation that you're not realizing, by the way, neither am I, because we're still in the stock. It's there. It's a paper game. But what I have is realized gains along the way, which is my cash secured puts and covered calls. But I'm working a lot. You're chilling. You know what I mean? Like, but this is my job. Selling cash securities and covered calls is my 9 to 5, right? Where other people are able to be engineers, executives, whatever it is that you're doing. So I totally get it. I would say that buy, hold, and hope is an easier way to make money. What I do is a hard way to make an easy living.
So I think you made up your mind. I think you want to put up these contracts for sale.
No, dude, I'm being very disciplined.
No, but here's my point.
I'm being very disciplined because I think, and what this market does is extremely irrational.
Then why don't you put it up at 20? Why don't you put it up at 25 and at least get something? Because 25 is pretty egregious to you for a run. So why not get at least something?
I put them up at 22 and I couldn't get any takers, bro. Like I'm close. I'm gonna do this. I'm gonna try to get these filled at 22. It's just 200 of them, and then we'll do the emit plan. The emit plan is to put them up at like 24 or 25 to where you're like, I don't even have to worry about it.
Or even 26. My point is like some premium is better than nothing. And if you already made up your mind that you don't want to fight with SoFi getting re-rated,
right?
Why not get a little? I mean, I do that sometimes, where I go really out of the money, and even if it's $100,
it's almost like you're daring the market.
Yeah, it's like I mean, 4 cents is nothing, but still, it's 4 cents.
Yeah, like, well, I'd be like over here. That's a 5 delta, bro. Like, is the juice even worth the squeeze to create that pressure? I mean, let's just see what 500 contracts looks like. See, I'm gonna make like
$3,000 is $3,000, bro.
You can do even worth it, dude? Like, seriously, is it? I mean, I don't know. I mean, fuck it, I'll do it.
I know your game is guaranteeing 2 to 3% a month.
Yeah,
so I get it, but I don't know, on earnings, you just
it does feel like it does. I mean, to your point, it does feel like a free $3,000, right? I'm like, dude, like if SoFi were to go to $25, dude, I mean, I'm jumping for joy over here because this is like a super, super positive problem to have. I mean, dude, I'm not trying to sound condescending. All I'm saying is because it creates accounting issues and stuff, and you're just like, dude, this is like, there's not a lot of juice in that lemon, but dude, $3,000 is nothing to scoff at for sure.
Also, you are emotionally attached to SoFi shares. Just like
definitely a lot more than any other stock. Yeah, I would say Riot's a close second, and then the one that I'm more attached to than all of those combined is Tesla.
Yeah, so you just even if you can get $3,000, but don't have to get rid of them at 20 and be stuck in a situation.
Well, it's not even get rid of them because I wouldn't get rid of them, but it's you don't have to manage it. Is what you're really saying. That's one of those where I shouldn't even have to look at that thing.
Yeah, because the best thing that could happen for your portfolio this year is SoFi pulls a Robinhood, Palantir, Rocket Lab.
Facts, this thing's at 20 million. Yeah.
Yeah, and that means the paying to get out of the covered calls at that point would be super annoying. I mean, it would be manageable but annoying.
Facts. Absolutely facts. Good stuff, dude. Good stuff. Appreciate you, dude. I feel like I picked up an extra 3,000 I was not counting. And I wasn't even looking at it that way because I'm like, you're right. It's easy. It's not a lot of money, but it's easy money, and I don't have to look at it. And I have to look at it because I have been looking at this thing. Like, I'm not even gonna lie. I looked at this position over here, the $20 calls yesterday, and this thing doesn't expire for another week, guys. And I looked at this position yesterday probably 5 times, and that's a lot for me,
bro. But see, that means you're losing a little bit of sleep, which is not good.
Yeah, that's literally probably cost me 15 minutes of my life last night. Like, I looked at it, I studied it, I Fibonacci this thing again. You know what I'm saying? Like, I mean, I'm like literally like investing time because I was like, shit, I feel like I got caught a little bit here, and it's okay because it's liquid. I can manage it, but I'm like, I'd rather not be in that situation. I'd be more comfortable with the 22 handle right now. Just
yeah.
So good point. I mean, I give you all the full transparency, not just the numbers. I give you the emotions that are tied to these numbers and these moves. You want to talk about a huge winner in the portfolio right now, which is Hood?
Let's talk about Hood, which is at what, 51.45. Not bad.
Yeah, I caught your stream earlier. You said this thing's going to do 30% this year, and I want to feel like Crossroads has said, or Roy Crossroads has said something similar. Like, this thing's like really hitting its stride, and the better it performs, the cheaper it actually is from certain metrics that we look at, even though you're kind of like shitting on my metrics here a while ago, but those metrics do matter to a certain extent to a lot of people.
Well, Robinhood's PE goes down the more they grow, right?
Yeah.
So yeah, it's been done well. So last week we did I think 100 or 50 puts at 45.
Yeah. So walk them through the position. What you see here, you see that 10,000 shares at 21. You want to take it away, Mint?
Yes, we had 10,000 shares at 21, so we're up about 300 grand on the shares, I believe, 304 grand, 143%. We have covered calls at $48 that are underwater for February 7th, and then we have covered calls at 57 for February 7th. That I think should be all right. Then we have 35 leaps we bought, 30 leaps we bought, or strike price of 30 and 35, 100 leaps in total. And then we have 50 puts we sold last week at 45, expiring for February 7th.
I'm trying to find, no, the 45 leaps. Yeah, these guys right here. So these expire in a couple of weeks. Sold them on your show last week, and we're already up 76%. So do you want to milk the 1750, or what are you thinking there? Because that does free up a lot of money, but I don't really have anywhere to put that money. That's why I haven't been blowing you up, because whenever there's other places that I'm like, oh, I could go put the money over there, you know, I always look at PPD, premium per day. But since I don't have anything, because, you know, I was asleep, like legit, I was asleep whenever I messaged, you know, the little chat or whatever, commented on the chat. What are you thinking? I mean, you follow this position a lot closer than I did.
I think we leave it. I don't hate $50 puts going into earnings, but, you know, the hoods run a lot. So earnings, even if it's good, you could see a little bit of volatility. So I think we just leave it, because even if we have to buy it at 45, we wouldn't be upset. And most likely we're building some support at 50, which means we don't need to touch it.
Cool. Yeah. I mean, works for me, dude. I don't care. I haven't even looked at this position. I'm looking at it with you guys for the first time. I feel good about it. I think this is still very manageable. I could roll these already. I could put a 50-51 handle on them and add a couple months to the contract or whatever. But I'm also like, I don't know, because, you know, there's 10,000 shares owned, and then there is 100 leagues. So that's the equivalent of 20,000 shares, if you will.
Yeah. Yeah.
And there's only 100 covered calls against these shares and or leaps. So what about the other 100 renters, if you will?
So we have 100 calls that we could 100 leaps that we can sell shares against, basically, or calls against.
Correct. Yes.
What
and I did these because remember I had the 50s that expired worthless last Friday. So I put those up for sale to match these guys because I knew these were going to be a pain in the ass. So I put these up for sale recently at 57 because I was like, well, 57, you know? And then I'm pretty much like even on those. And you'll see that I did these on 121 and I brought in that money and literally about even on that particular trade. How do you feel about adding to this 57 or doing like a SoFi thing where you put it at like 58, 59 or 60, whatever is like feels real out of the money? Because this is a 22 Delta. This is not a picnic by any stretch.
Yeah. Can we look at the option chain? Because I don't hate that. I think even at 70, 75, people are paying, but let's just see what they're willing to pay. I would do
earnings. Are earnings our first part of February or
yeah, their earnings are the 12th, so 221 is probably a good one.
Okay.
Or we could do
I was thinking about matching them up to the ones that I have here. I got the 48 because then we're unencumbered for earnings right now. So I have the 48s that I've got to manage at some point unless I'm okay losing those shares, which we're not. And then I've got the 57s. I was suggesting put something over here in the $60 range.
I don't think that's crazy. $60 in the next 15 days?
Yeah, and then we can reassess going into earnings. By that time, I will have already rolled these 47s and probably put a 50 handle on those, you know, and added a month or two to the contract.
Right. Yeah, I think we can put up 100 for sale at 60. I don't think that's crazy. And if we do have to manage it at 60, I think that's a bit more manageable than 50 or 48.
Yeah, no, agreed. So 100 contracts is what you're saying, then maybe do something like 37 just to squeeze a little bit more.
So that is using our 100 leaps, hopefully getting 37 cents a contract, which would be $3,700.
Oh, there you go. Right. Yeah, so that feels like found money to me. Do you really, I mean, unless this crypto thing is like a real thing, right? This executive order, again, this is where ignorance isn't bliss because I am ignorant. Ignorance is not knowing. Stupidity is knowing and doing it anyway, right? But what I'm saying is I am ignorant from the standpoint of I don't know exactly how it works. I know they repealed something. That's the headline, right, on the X that came across my feed. But I don't really understand the ramifications or repercussions of that and how quickly it goes into effect is what I'm saying.
Right.
And I'm kind of lazy from the standpoint. I'm not going to go find it out. If y'all could tell us on the chat and save us time, that'd be great. Or ask Chat GPT or Grok or whoever, maybe they could shed a little light to this thing, because I don't know how it works. Truthfully.
It's a good foundation to get to the strategic Bitcoin reserve, but it's not happening overnight. So it's good, but it's not going to explode Bitcoin tomorrow.
Yeah. So now we're sitting here with $60 covered calls at 60. Now the market's saying they're worth 39, so I might have squeezed out a little bit of money there. But then what I like about this play emit, just like a little more education for the folks that want to consider maybe selling cash secured puts and covered calls, is two things cannot be true. These covered calls cannot be underwater, and these cash secured puts didn't print for us.
Right.
So now the question becomes to you is, do you want to double down on some cash secured puts over here? Because that psychologically takes all the pressure off the covered calls.
Yeah.
Because if those cash secured puts are getting challenged, then that means that the covered calls cannot be getting challenged. Or if the covered calls are getting challenged, then that means that the cash secured puts cannot be getting challenged. And that's the scenarios that I like to create, where I'm guaranteed to win one side of the trade. It's like bowling, right? So it's like Garcia used this analogy. It's bowling, and you're putting the bumpers up on the boat. So you're creating your own Bollinger Band, if you will.
Right.
So do you want to put another layer to the Bollinger Band there?
I like it. I think the 45 put is good. I like it. I think we're getting a strong.
We already have that one. So what I'm saying is, you don't want to get like a little bit more aggressive with because I don't know about tying up that kind of money, because how much is it? It's 45.
Yeah, no, the premiums. No, they're not that good. No, I see.
Yeah, but I'm saying, what about it like 47 or 48?
Yeah, I think that's fair. That's not bad. And again, this comes also from my conviction on just understanding these guys can get the growth there. So I think 47, 48 is not horrible.
So then now we're really loaded up on 2.7. We're still outside of the binary event, right? The binary event is after this play here. So what about something like right here at 47?
Yeah.
The 19 delta, and we do another 50 contracts, if you will. Because then this is going to help out the covered calls that are underwater on this stage as well, because we're bringing in more credits, and that's going to help me to manage those covered calls that I'm going to have to roll. I don't have to roll in for a debit, but now it becomes an option because I've got other people's money to work with now.
Right.
Presuming that this one works out. Go ahead.
And that's a 1.3% return in about 14 days.
Not bad, right?
It's not a lot of businesses where you can get 1% on your money in 2 weeks. There's just not a lot.
Yeah.
So, TJ, this question: how are you using leaps as collateral, and do the leaps have to be in the money to be used as collateral?
No, the leaps do not have to be in the money to be used as collateral. Robinhood basically says, or your brokerage basically says, hey, we can exercise you on your leaps if your covered calls were to get assigned. So that's why we'll allow you to use them as quote unquote virtual shares, because you have a contract to buy those shares that we can make legally and binding for you. They obviously see your bankroll, they see what you're working with, etc. So they have the ability to exercise and make it so that you made good on that contract, and Robinhood is not holding the bag. So whenever you own some leaps, as long as you have level 3 options on your account, because not everybody does, you have to submit applications for that, answer some questions. That way they can kind of get a feel whether or not they really think you know what you're doing and talking about, because they don't want you to get in trouble and blow up your account, because there's a lot of misnomers out there about like Robinhood doesn't give a shit about you. They'll allow you to piss your money away and gamble on things like, who's going to win the presidency.
Yeah.
But Robinhood does kind of have to give a shit a little bit about you, because they're monitored, right? They're monitored by higher authorities like the SEC and FINRA and whatnot.
Right.
So they got to make sure that you are qualified mentally, if you will, to, from a knowledge standpoint, to be able to navigate the waters, right? To navigate the stock market.
Oh, wow. I didn't know you can't do that on Webull. Mary's saying you can't do. It's called a 4-man covered call for those that don't know the strategy.
Yeah, it depends on whether or not you have level 3 options or not. I don't have any money in Webull right now, because I just moved everything over. So I don't know that if that is true or not. But if they're saying that it isn't, then I would side with them, because I don't know the answer to that test.
All right.
I like it. How do you feel overall? Give me a summary or how do you feel about this position? Because I had screwed it up big time not listening to you on the cover calls. I fixed that by giving a lot of money back and just erasing those wrongs, right? So how do you feel about it right now, aside from this little $48 cover call that looks like it's totally underwater right now, but if there's a little bit of a dump on earnings or in the market because earnings is out on the other side of this thing, I feel like this one could kind of like go away all on its own.
I think it's good. I think we had some issues at 25, 26 with covered calls. We got rid of those, paid the piper, and now we're printing a lot of money on it. And it is what it is. Phenomenal company, phenomenal leadership. They have a lot more stuff coming up this year. 3 new events. I think it's easy to sell aggressive puts on this because our average is so low, and our adjusted cost basis must be below 20 at this point.
Yeah.
That getting assigned more shares is not a concern, and there's good option premiums. We can sell calls against those shares if we get too many shares. So I like it.
So on the adjusted cost basis, and I'll pull it up here on the tracker in a second. I think the reason that it wouldn't be below 20 anymore, though, is because there was a cash output to buy these leaps.
Right.
So that was 34,500 to buy these leaps that are currently worth 106,000. So how do you feel about these? Like, what is the thought process right now? Because these expire in a couple of years. Are you thinking hopefully Robinhood is at like 80, 90, $100 by then, and then we're actually converting these into shares, or is this still just a flip in your mind? Because these are, some of these people might find themselves in situations where they buy the leaps and then they print, but they didn't have like an actual plan for that, if that makes sense.
I think we hold these leaps till 2027, dude. I think with S&P inclusion, Hood, I said triple digits in 5 years. I still think triple digits is probably 3 to 5 years away, but I think 70 to 80 by 2027, if not by the end of this year, is not crazy. Again, a lot of it depends on the market and their execution, but I think those are leaps that we can sell out of the money calls against to bring in premium every month, and we can hold them.
Which is what we did. Yeah.
Which is what we did. And go to the leap again. I think you bought them. I want to see the day we opened it up. We opened it up 11/1. So November 1st. This was right before Trump got in.
For 690.
I remember we were on the show and you were like, I think the stock was at what, like 28, 30. It was basically at the money, these leaps.
It'll tell us, right? So just go to the thing on 11/1. So we go to the chart on 11/1 and you're able to know where it was, right? So 11/1.
That's what, 23. Oh,
23.
wow.
Yeah.
So you bought that. Oh, you bought that right after the earnings dip. Yeah. There you go.
Not bad, huh?
Not bad. That's the time for people that want to buy options. This is when you buy. If it's a good company, it falls for what could be a irrational reason. That is when you buy. You don't necessarily want to buy them when the stock's at 50, even though they can still do well. But at 23, giving yourself 2 years of time is not the worst time to buy them.
And then I averaged up. We bought the 35s not too long ago. Bought these on 12/12. So these are doing pretty well also. This is whenever I told you, hey, I think that Robinhood's turning into an investment. And we bought the 35s, and I was kind of reluctant buying these, right? Like we weren't like super excited about it, but they've kind of worked out, and we can go to 12/12 on the chart and see where it was.
Like 38, 30. That was right after the investor day. They pumped to 40, then they took a little bit of a breather.
Yeah, so 12/12.
39, yeah. $40 basically, roundabout.
Yeah, so it's kind of worked out. So what I'm asking you though is, do you think that we would want to convert these to shares down the road, or is this just a flip? Is what I'm asking you.
I would, because I'm very long Hood, but you might have other places to use the money. So I guess
I don't have anywhere else. So right now, I mean, we're good. Like I trust you. I don't know as much about Hood, but what I do know is that if they keep expanding, or when they expand to other countries, I mean, has any of that stuff even been factored in? You know what I mean? Like that's
it hasn't. But to be honest, and this is where I'll critique them, their UK launch was not good. And we haven't heard about it. And then Singapore, they're saying they're going there, but we don't have a timeline on it. So I hope they do it this year. If they don't, then, that's going to be part of the growth story that's not as strong. But largely your thesis is right. Like when they start expanding, if they bring the user experience that they bring to us in the States across the world, they should be able to start capturing market share globally, which would be incredible.
So what about if Nubank is having all of this success in Latin America? Wouldn't it make sense for like the SoFis and the Hoods of the world? Because I feel like SoFi has alluded to wanting to do business over there, unless maybe I just heard something in a pipe dream. But wouldn't it make sense that that's the audience that they go capture? Because Nubank's kind of like doing the work and being like, hey, it's a good idea to like just not have your money under a mattress.
Yeah, but it's more about regulations at this point.
Yes, I mean, again, I don't know how the intricacies, right? I don't know how, because I mean, to me, the obvious one is like Canada, right? Especially if Donald Trump's talking about making Canada the 51st state or whatever, which I think was just,
No, but Vlad already told Tanner they can't do Canada because each province has a different like financial set of permits they have to get, and it was just like there's no way we could do it. I asked him about Singapore. Yeah, I asked him about Singapore at the Investor Day, and Steve Quirk, the chief brokerage officer, said that Singapore is, from a regulatory perspective, very easy to work with. That still might mean it takes a year, but they are feeling comfortable that it's easier to expand there than not.
Interesting. What about that one company that Bitcoin's their currency? Is that El Salvador, or what about something like that?
I don't know if there's enough disposable income to invest in El Salvador with the people there. But yeah, I think Singapore is good. It's a finance hub. I think India would be amazing, but that's going to be a hassle regulation wise. And then the UK is perfect, but they just haven't really been able to bring a lot of juice to the UK yet. So,
gotcha. Yeah, I'm just curious. I don't know. So I don't know. And I'm not afraid to sound dumb, because this is how you get educated on things. You have to be willing to ask the questions or do the research. I have this platform, so I'd rather just ask the questions. There's a lot of smart people watching your stream.
Yeah, I agree. Okay, what are we doing with Palantir? What are we doing on that one?
Well, Palantir I'm in the camp that Palantir is overpriced. Don't crucify me. And I got caught in a real big way by mismanaging covered calls. So I sold these shares at $79, essentially. But I want in. I keep stocking the stock. It's kind of like you went through this breakup where it was a mutual decision, but bullshit, she dumped you. So now you're stalking her. You're cyber stalking her, and I'm cyber stalking Palantir, and I'm spending way too much time watching your streams and ringing cowbells that I don't even have and shit. And I'm not even part of this thing right now. So I was like, well, we need to remedy that, because I feel like you
feel left out. You feel like
I'm all up in my feels. I'm all up in my fields. She's moved on. How do you know she's moved on and she's auditioning, bro? Because whenever a girl goes through a breakup, what's the first thing they do? They take the social media and I am woman, hear me roar. And here comes the selfie like this. You know what I'm saying? Like they start auditioning, right? They start auditioning for the D. Yeah. And it's just, I make fun of it with Kristen all the time, because if a girl that we know is going through the breakup, I go, baby, within 48 hours, we're going to see the glamour shots on Facebook or whatever. And sure enough, 9 out of 10 times, that's the way that it works out.
You see a little bit more cleavage than usual. I mean,
so I'm the guy that she broke up with. And I'm stalking her. So it's like, I want to feel the pain every time she posts a photo. I want to feel the pain every time she tags somebody at this fine dining restaurant or whatever. So that's what Palantir is to me, that hot chick that got away because I didn't play my cards right. So now I want back in. So the only way that I can justify going back in on a stock that is overpriced and overvalued in my mind at this point for what it is right now is put credit spread. So I
okay, so this is really good. This is really good. So we haven't done this segment in like 8 months. We haven't talked about this. So this is good. So do you want to explain these or do you want me to explain these?
Go ahead. Ahmed, you're probably better at spreads than I am because of Chris Patel's tutelage.
All right, cool. So let's talk about put credit spreads. So put credit spreads are actually really, really, really exciting if you can know how to work them correctly. So put credit spreads, you're essentially buying a put and selling a put at the same time. So in this case, what TJ did is he's buying a $60 put, which means he thinks the stock is going to go down, but then he's selling a $65 put, which is just a regular cash secured put, on top of the put that he bought. So it's a bullish strategy, not a bearish strategy. And essentially it implies you believe the stock that you're doing the put credit spread on, aka Palantir, is not going to be below the high end of the strike price on the put that you sold, aka 65. And if it does go below, then you have a $60 put that is going to appreciate because the stock is going to go down, the put's going to go up, and you're going to make the difference in the spread. And if it stays above 65, then you're going to collect the premium in the middle. And the collateral, the beautiful thing about put credit spreads is the collateral that you have to put up is significantly lower than the collateral on a cash secured put, because you don't have to put up $6,500 on a $65 put. In this case, I think, TJ, you have to put up $500, 65 minus 60.
Yeah, so 25,000 in collateral because it's 50 contracts.
Correct. So 65 minus 60, the width of the spread is $5 times 100 shares is 500 per contract times 50 contracts is 25,000. If TJ were to sell 50 contracts at $65, he would have to put up what, 300,000?
Yeah.
So a bit different there.
So now let's talk about the math though. So you tie up $25,000 for a couple of weeks and they pay you $3,350 up front. There's not a cash secure put in the world that pays you that kind of money on a ROI perspective.
Correct.
So what are the gimmies and the gotchas? Let's talk about that, guys. So I can take the floor a little bit a minute.
Yeah.
The gimme is if Palantir dips below $65, now you have to manage this trade. And you can roll a put credit spread on Robinhood, but it's like a four-legged scenario, so to speak, because you have to buy to close the long side, sell to open again, and then sell to close the short. You have to sell to close the long side, and then buy to open again, and then you have to buy to close the short side and sell to open again. So you have to reverse the process. You have to check all these little boxes. And you can get it done. It's just very, very tedious because they don't just have a roll button for spreads. At least mine doesn't. Some people claim that they do. Some people claim that they're able to roll spreads. I guess I don't have that updated version, or maybe that's a beta that they rolled out for some people when I wasn't privy.
Some people are saying on Robinhood they can roll a spread. I've never seen that.
Yes. I've heard it. I've actually done a whole thing on put credit spreads, like a whole 1 hour seminar with options. This guy that's just, his knowledge is way above mine as far as, I call it creative options trading.
Gotcha.
They do, all the iron condors, the broken wing tip butterfly, jade lizards, labradoodle, all kinds of shit.
TJ, before you leave this earth, you need to come up with a term that becomes iced into the options terminology for the rest of eternity.
Yeah, backstop trades is what it's going to be.
No, that's a good one, but we need something like a butterfly type, some crazy shit. We need something like that. That is, everyone knows.
My broken wing tip, wrap around, freaking whatever, manufacture the win strategy.
Yes, we need something. So in this case, if Palantir, let's say, goes to like 50, right, something horrendous, what you can do is you can sell the $60 put, because you just made a ton of money, because that one should be going up if the stock goes down. And then the beautiful thing about put credit spreads, if you have the collateral, you can turn that $65 put into an actual cash secured put.
Right, and manage it accordingly.
And managing it.
So what is the strategy here? The strategy here is if it goes against me, which I don't think that it will, I want it to, because then now I'm actually interested. So whenever I sell a put credit spread, guys, I'm picking a short strike. What is that, baby doll? Oh, okay. Well, you used it, so now you don't need it anymore? Is that what you're saying? I hit it with the desk, baby doll. Anyway, I'm picking a strike price that I'm halfway interested in owning these shares. But I don't want to put up all of that collateral because the juice just isn't worth the squeeze right now. So I don't want to tie up $300,000 right now. So I'm like, well, let me just get a higher ROI. But at the same time, I don't want to go crazy and do like 200 contracts over here, because then I wouldn't even have the collateral to do 200 contracts probably at $6,500 a pop. You know what I mean? So you have to be real careful with your position sizing here, because even though these are sexy, getting your 12, 15% return, whatever it is, the ROI over 10% typically. If you lose once, it wipes out like four wins. You know what I mean?
Yeah,
and this is a defined risk strategy. You want to talk them through that?
To put that into context, TJ put up 25,000 for these put credit spreads. He got 2,200 plus 1150. That's 3,350 divided by 25,000. That is a 13% return in 2 weeks. That's almost up 1% a day. If there's a big if Palantir does not go below 65. But let's say after earnings, which is on 2/3, this expires on 2/7, Palantir tanks. TJ has the collateral, the bankroll, to sell the $30 put, or to sell the $60 put, make his profits there, because that one's going to go up if Palantir goes down. Right. And then take that $65 put, which he would need about 350 grand of collateral for, and then to not lose the money, but rather turn it into a put, and then just manage the position from there.
Right. So I picked a strike that I'm like, hey, if this were to actually get breached, you do the roaring kitty where you like sit up on your chair a little bit because now you're interested.
Yeah.
Now you're interested. So what is my strategy? What is my hope? Let's just play the game. You saw her at the end of the bar and you visualize having kids with her, because this is what guys do. We go from A to Z before we even get her name, right? We're like, oh, we're gonna name our little kid Jeremiah or whatever. So this is what you do when you see the pretty girl, like you envision the white picket fence with this chick, and the girl's like, I don't even know what I'm gonna call him tomorrow. You know what I'm saying? Like, we're just so on different wavelengths. They did a book about it. Men are from Venus, Mars, some shit like that. Anyway, I'm interested if this thing breaches the strike price, the short strike, because now I'm in the game. She's available again. She went out. The guy didn't even pick up the tab. They ran the bill, and now she's stuck. And she's like, oh shit, it was good with TJ. You know what I'm saying? Because I'm the guy that's all up in my feelings, because we said that we were going to move on, but what happened is she moved on and I didn't, right?
Right.
So now I would turn these into cash secured puts, and I would roll to 60. The hope, like in a perfect world, is I want to take ownership of 5,000 shares at 60. I want to take ownership of 5,000 shares at 50, and I want to take ownership of 10,000 shares at 40, because I feel like there's a gap on that chart. And you can have paper gains on here. He'll verify what I'm telling you. There's a gap on that chart, and historically those gaps tend to get filled every once in a while, usually most of the time. So that's kind of what the pipe dream, if you will. Now this thing gonna have earnings, and they're gonna just announce more and more positive stuff. So this may never happen, but if it does, I want to be ready. If it does not, I have decided that I'm going to figure out how to make $4,000 to $5,000 a month off of Palantir for the rest of the next 5 years via put credit spreads, until I finally get caught with my hand in the cookie jar and I can build a position of a minimum of $5,000. But it's got to be the dip, right? It's got to be a dip of where it is at those levels. And I think that 65 is a little bit of a pipe dream right now, but it's not out of the realm of possibilities, in my opinion. Amit, what do you think?
I think the strategy is actually really strong, because Palantir would have to fall 18% for the $65 strike to be in jeopardy. So let's say that doesn't happen. You get 14% on your money in 2 weeks.
You're not angry, you know?
You're not angry.
Yeah.
And if it does happen, you missed her, and you finally say, I'm going to text her back, and then you get into
get my shit together. I'm not going to scream. I'm going to take out the trash. I'm going to do all the things. You're going to make all the promises that you broke. That's why she left your ass, right? So you're gonna say that I'm going to do them for real this time. So that's what I'm deciding to do. Is I got to make money off this stock, because I can't stop thinking about it. I can't stop thinking about her. It's like I feel like my life's incomplete right now. I got a freaking Nubank, for Pete's sake, in the portfolio when there should be Palantir. You know what I'm saying?
So you've been my friend for 3 years. You've been watching my channel before you even knew me. So Palantir's got to be in the portfolio somehow.
Bro, I just feel like this is just, it feels wrong in so many levels, dude. I just feel like, one day I might have the pleasure of meeting Alex Karp, and I don't want to have to look him in the eye and say, dude, I was out of your stock for longer than 6 months. Dude, please forgive me, Alex. And then there's no hair for him to rub on my head. You know what I'm saying? So he's just going to give me that look and then give me another fucking word that I don't understand. So I'm going to have to go Google it I'm gonna pretend to understand it when he says it to me. And I'm just like, I don't want to be berated by him. You know what I mean?
Yeah. Oh.
Because he'll be like, I hope the cocaine was good or whatever. Who knows what the hell he'll say? We're having fun here today, guys. I hope y'all can appreciate that. You don't want to take life too seriously, bro. It's like too short. Dude, we're approaching $13 million. I mean, holy shit.
12.8. So year to date, what's the year to date? It's like 10%, 8%.
Yeah, I think it's like 12 or
14.
Yeah.
Dude, it's up $1 million in a month. 1.6 in a month.
Yeah. You should see the father-in-law's account. One day I want to come in here, blow up my channel from 8,500 to like 220,000 if I could just get permission.
Wait, is your father's account also on Robinhood?
Half
on Robinhood. Okay.
Yeah.
Gotcha.
Yeah, they're having discussions, dude. They're having discussions. He's actually trying to set up a call with Vlad.
Yeah, like, you should, bro.
Dude, they already did. My brother-in-law spoke to them, and they already allow us to do 10,000 contracts on one.
Oh yeah, how did that call go? You said it was last Friday, so they updated.
Wow. Yeah, I didn't even have to be on it, dude. Little Zeke took care of it for us. He's the politician of the family, bro. He knows how to talk and not lose his cool. Not me. I'll be like, X, Y, and Z, fuck you, we're leaving. Like I'm not good for that stuff.
So he negotiated with them, and he got the 5,000 contract limit to sell calls to 10,000.
Yeah, or to just have a total of 10,000 contracts on one underline.
Dude, you're gonna become a legit market maker for stocks on Robinhood. So now your father-in-law is thinking of if they can give him a sweet deal, bringing over a lot more money.
Yeah, wow. It would be. He could bring a total of like 9 figures.
It's a lot of money.
And but they want it for that. But these people, they like to feel special, bro.
Yeah.
They like to feel special.
They gotta wine and dine. They gotta
feel special, and he's earned it, bro. He's earned it. He's a very, very well-to-do human being, just a damn good dude, bro. Like, he motivates me to be good, because great things happen to good people. You know what I mean? Like, they do over long periods of time. That's the trend line. You know what I mean? If you do good, if you want good things to happen to you, well, be a good dude. Like, be a good dude. It really is the law of the land, and it is just all the success. It couldn't happen to a nicer guy, dude. He probably is like legit one of the nicest, most humble people that I've ever met. That just happens to be worth a shitload of money.
Yeah, and look, when you're very successful, it's very hard to keep your humility and your humbleness. And for those I think those are the people that really win, the ones that stay humble, even when they see success in their life. So.
Yeah, but he came from nothing, dude. He grew up with dirt floors and didn't even have a working bathroom in his house.
And
it's just like, I'm like, dude, what are my excuses? You know what I'm saying? Like, I feel like a loser that I can't get it going. But it's just, he picked a vehicle with a personal injury, and he's a personal injury attorney. Does very, very well.
Well, so why is he thinking Robinhood because you manage it on Robinhood, or does he actually like Robinhood? Is there any attachment that he has?
Dude, he thinks that's where the world's going, dude. Like, this dude is very, very progressive in his thinking. He sees things so clearly, like, he drives, the S-Class Mercedes or whatever, but he's like, hey, everybody's gonna have these damn Teslas eventually. They're glorified golf cars. He owns a golf course, right? So he sees these electric golf cars. He's got some, and he's like, that's where the world's going. And he goes, and then my business is going to eventually, luckily he won't have to be in it anymore, but he says his business eventually will be in jeopardy from the standpoint that nobody's gonna be having accidents anymore. He goes, so that's good for humanity. But that certain businesses always suffer when there's advancements in humanity and technology and stuff like that. He goes, but luckily I'm on the other side of that thing already. But he's like the things of fender benders and stuff. He goes, that thing's going to be a thing of the past, and that's what keeps the law firm open while you're waiting for that big case to crack, so to speak.
Right.
He's like, people aren't going to be having accidents anymore because people are having accidents left and right now because the advent of the cell phone created that, because everybody's distracted while they're driving now. That's why he's always lecturing me when I get on the motorcycle. He doesn't like me being on the motorcycle anymore because I know you've been driving your whole life. Mijito, he calls me Mijito. but it's because people are just not paying attention anymore, because the steering wheel is like a distraction to them because they're on their cell phone while they happen to be driving a car.
Yeah.
it didn't used to be that way, but now that's just the way that it is. You have to be very, very careful on the lookout and stuff. And he just thinks that fender benders are going to go away because, you know, these cars essentially are driving themselves and they're always paying attention, whereas you are not.
Well, FSD has changed my life, and I'm paying for it every month now because, and I
So
agree.
is that $100 a month or so? That's what I think Jeremiah told me he was paying.
It's $100 a month, and I know $100 sounds like a lot, but it's freedom, dude. When I'm driving, it's freedom.
Dude, can I ask you something real quickly on the Tesla? Dude, I pay Jeremiah's insurance until he turns 25 in April. Is the deal that I made him whenever we got the Tesla. Because he does Uber part-time with it. But dude, the insurance bill is coming in at almost $400 a month. Is that just because he's doing Uber and Lyft as well? Because he's got a Model Y, and I think that's what you got as well, right?
No, so I pay on my Tesla, I think no more than $200 a month, and Progressive in New Jersey is really good.
Okay, yeah. So we went with Tesla insurance. I guess Tesla has an insurance because I'm co-signed on the thing, and I feel like we signed something with Tesla collateral. I don't know what it's called exactly.
Yeah, some people in the chat saying Uber, Lyft's asset. Tesla insurance is definitely a bit more expensive in certain locations than Geico or like Geico in New Jersey is like $600 a month. So I had to leave Geico because I was like, what the? I'm not paying $600. But so Progressive's a lot cheaper. But the Uber and Lyft probably adds to it, and also Texas just might insure Teslas differently. You know?
Yeah, I don't know, but I was just like, okay, so again,
also he's young, bro. He's definitely young. That's another reason.
Yeah, he's going to be 25 in April, and they said that theoretically the insurance goes down when you're 25. I don't know if all these things are true. This is just hearsay at this point, but I thought that they were keeping track of how he was driving, and I thought the reason that the insurance was so high is because Jeremiah is just not a good driver.
No,
that's what I was thinking.
I doubt that's it. I don't think that's it.
I mean, this car is like tattletaling on you, right? Essentially.
So it's not just Teslas. There are other ways that insurance companies can like put devices in your car to get a cheaper insurance or a higher insurance based on how you drive. But I don't think it's because of this. I think it's because he's young. He's doing Uber and Lyft, and it's Texas, and Texas is just different. Like New Jersey, dude, there's a new Tesla every other freaking block in New Jersey. Gotcha. Texas is different. A lot of people love their gas guzzlers in Texas. So the insurance mechanisms of a Tesla just might be different there.
Interesting. I was just curious, dude, because I looked through I don't even, I dumped through a credit card bill the other day because it felt abnormally high. It was on the Discover card. And I was like, dude, like, what am I doing with my life? Like, why is this bill so expensive, right? So I started thumbing through it, and then it has like these little pie things that shows you where the money's going if you don't want to like go item for item, because there was like over 200 transactions, and I ain't got time for that shit. Yeah. I just looked at the insurance pie, and I was like, dude, what are we doing here? This is crazy. Yeah. And it's not just that, but I think insurance in general, dude. Like I have this 2016 Jaguar that I gifted to my dad, but I keep full coverage on it. Dude, that thing's $333 a month, bro. And a 2016 Jaguar is probably worth like 20 grand.
Right.
Like, all right, so I'm just like, we both of these little things, it's like $800 a month, and the broke TJ from the oil field mentality came back, and I feel like it's just too much. It just seems like it's too much. I don't know.
Do we have any other important plays? I mean, everything else we already know. Riot, we know about. Tesla, we know about. Amazon is fine. I don't think there's anything. You didn't add any new positions. Nubank we talked about.
So I have this one here that I was curious to get y'all's feedback on. So obviously I have this Riot position. So I have this Riot position that, oh shit. Okay, good. So it's up a little bit today.
That's good.
And I have cover calls at 16 for today. You see, this is my vision with SoFi, right? When I do cover calls, you don't even have to look at it. They expire today, and I'm like, I ain't gonna give you back $450 because you got to go up $2 more. Ain't gonna happen, right?
Yeah.
And I have 200 cash secure puts at 11, so that part's good. Let me tell you what's not good. I sold these 1,250 covered calls at 20 for the beginning of next year, because that will potentially be where the crypto winter starts or whatever. You know what I mean? I feel. And I know it looks like I'm positive on it, but I'm not, because there's some rolls and stuff. So I'm already down like $100,000 on these covered calls. So what I've done is, instead of rescuing that position, in other words, like I think I'm okay just letting all of those shares go at 20. I don't care where Riot goes. I'm not going to be worried about what I'm leaving on the table, because I bought 500 leaps, and from a position sizing perspective, I'll just get back into the shares, and I'll have 50,000 shares at 15, and I'll play those till the next cycle, if you will. And I'll just have made whatever money I made on these actual shares. The party stops for me at 20, but I'll keep selling cash secured puts along the way, and I'll keep selling 500 covered calls against these leaps over here, if that makes sense.
I think that's a good strategy. I mean, look, when we get into that theoretical crypto winter, it's nice to take profits there, right? Even if it keeps running up, you made really well on the shares. So
I guess my question though is, with all the big money now and all this new regulation and Trump doing whatever the hell he did yesterday, because I don't fully know what he did yesterday with everything with Michael Saylor and MicroStrategy and all of this other stuff, is the crypto winter really going to be cold like it was last time? I guess is what I'm saying. Like did they just move up the floor a couple of runs on the crypto winter?
I think that the crypto winter will not be as cold. However, that's why you have the leaps, right? Yeah. So even if those like that's I think the strategy makes sense. I mean, at some point you want to take profits, and then you have the leaps to protect the upside. So I don't really think you're in a tough situation there.
Yeah, I think I'm good. I mean, if anything, I could increase the sizing a little bit on these leaps if I'm like ultra bullish, because I'm not really profitable on these. I just started, you know what I mean? So it wouldn't be that painful to add another 500 contracts over here and then just sleep easy at night and kind of hope that those cover calls go underwater and then I can get back into cash. Because what I'm doing with the portfolio, what I've been working towards, Amit, is really understanding margin maintenance.
Yeah.
And what would ultimately give me the most leverage. And what gives the portfolio the most leverage is owning more shares of Amazon.
Okay, so can you talk about this? So from a brokerage perspective and how the brokerage gives margin, can you explain why owning shares of amazing companies like Amazon helps? And while you do that, I have to go liquidate my bladder. So I'll be right back, TJ. I gotta go pee, bro.
We're good. So guys, whenever you see shares right there, like of Amazon, if you go to the bottom after you scroll through the position, you guys will see that all of these shares are for sale at $250. Right under it, it's going to give you the margin requirements. And the initial requirement is 50%. The maintenance requirement is 25%. That's as good as it gets in the stock market. So they're looking at that as like your Fort Knox. That's your gold, right? Like back in the 70s or before that, before Nixon took us off of the gold standard, the money in this country was backed by the amount of gold that we had in reserves. So that's what your brokerage is looking at. So when you have a margin requirement of 50 and 25%, that's really, really stable. They know that you're invested in something that isn't going anywhere. It's going to be here in the next 5 or 10 years. So they will allow you to go sell cash secured puts on collateral. They'll allow you to go buy shares on margin if you want to. Because if we look at the actual buying power, there's 2.7 in cash, but there's options collateral of 4.385. So this 4.385 is obviously larger than the 2.7. So the difference, that is how much money I am using in margin to sell cash secured puts. I am qualified to collect premiums on cash secured puts. That isn't even really cash secured puts. It's more like a margin secured put, but I don't have to pay interest on that margin. It's pretty amazing. But if I were to take ownership of shares and that dollar amount exceeds the 2.7, that's when I would officially be tapping into margin. And that's when the clock stops and the VIX is running. And I've got to the VIG is running, the VIGRISH is running the interest. And I would have to start paying interest on that particular margin. So the reason I'm trying to own more shares of Amazon versus Riot down the road is because the maintenance requirements on Riot fluctuate. Yeah. And right now, I think they're sitting at a 50-50. Yeah, they're sitting at a 50-50. They've been as high as as 72.60. So they're willing to loan you less money on those shares. So I'm trying to like play these stocks that fluctuate on the requirement and the maintenance and own less shares of those stocks and be in stocks that don't fluctuate like Amazon.
Because Robinhood basically knows Amazon will be here forever. They're a little weary if Riot will be here forever.
Yeah, but even Tesla fluctuates. And again, this only happens on Robinhood. I don't know if this is across the board, if they change these requirements for everybody, or if they look at your entire portfolio delta. I'm not sure what they look at, to be honest with you, Amit.
They probably have a very sophisticated algorithm to try to come up with this stuff.
Yeah, but
they can't lose money on this.
Tesla's at 50-30. I've seen this one as high as 40 on Tesla. So they'll loan you less money. And then, like, if you look at SoFi used to be a 50-25 up until about 2 weeks ago. And the story just keeps getting better. The numbers keep getting better. But then now they changed the margin requirement from 52 to 40. And they recently did the same thing on MicroStrategy. So a lot of people get margin called whenever these things happen. So I don't want to put myself in those situations. Right. MicroStrategy is a 76.70. This is where Riot has been before, at 76.70. And you don't want to get to where you get to that 100. Like there's a company that I'm in and another portfolio that is making a shitload of money on called Clover Health. But this one's 100.
Yeah, there's no.
Oh, actually, they changed it. It's a little different now. It used to be 100. But I guess it's gone up so much. It's like up like 600% since I last got in. They're willing to lend you a little bit of money against it, whereas before they weren't.
Go to GME. GME is probably 100, I think.
Oh, is that GameStop?
Yeah.
I'm not sure. I've never sold a put on GameStop. Have you ever been in this thing?
Never.
Yeah, I don't. Yeah, you see that this one here. There's no money there. So if you own shares on GameStop, you're hamstringing your the amount of money that you could borrow against your portfolio, because they're like, we don't know if this shit's going to be here tomorrow, or whatever the case may be.
So the goal is then, do you want to get like another 7,000 shares of Amazon? Like, how are you thinking?
I'm trying to get to 10,000 shares, a realistic goal of Amazon, and then I'm eventually going to reduce the ownership of shares on Riot and SoFi, play it a little different, more capital efficient, and then I want to get to 5,000 shares of Tesla. So those are the two pillars. And then maybe get to 20,000 shares or 25,000 shares of Hood, because I think Hood might be a 50-25er, or close to it. I don't know. I haven't even looked at it. Yeah, so it's a 50-30, so it's pretty good. And then the other one is I have some long calls that I can exercise on PayPal eventually. And I think PayPal is a 50-25er. Yeah, see, it's a 50-25. And then I've got these 100 long calls at 50. So I could bring this one back into the fold, because I recently sold these shares. But then when I sold these shares, the buying power dropped by like $400,000 immediately.
Can you check Apple? That one's got to be a good one too. But yeah, as soon as you sold your PayPal, I imagine your buying power got hit.
Yeah, so these are just things that I'm looking at. Yeah, 50-25. This thing's not going anywhere. I mean, my goodness, dude. $3.5 trillion company. The premiums suck though, dude. So Amazon's my play. The premiums are a little bit better. And I can see a double from here for Amazon. And I just can't see a double for Apple within the next 3 to 5 years.
Yeah.
I just think Apple's too damn big, dude. How are they going to get to $7 trillion a minute?
All the Apple bulls keep telling me it's the iPhone services. I'm like, I don't know. AI. I don't know if that happens. Maybe robots.
Don't know. We do have a lot of buying power here, though, Amit. Anything else you're eyeballing? Because NIO is not going to be in the portfolio too much longer. Because once I get these shares get called away, I'll be at nine. I'll be at 9 stocks, and I'm trying to get to 10. So I've got these shares at 437, and I've got them for sale at 450. And I'm going to keep doing this over and over again until I have the shares get called away. because again, this is one of those, definitely not a 50-45er, you know, this is a 50 or 50-25. This is a 50-50. So I don't need to own shares of that particular company right now.
What about selling puts on Meta conservatively?
Yeah, we've done that a few times.
We've done that successfully. They got upgrades across the board. Zuckerberg spending more money. I don't hate Meta at like 590 if we can get some premiums on that. Yeah, it's not going to be the best premium, but
the last time we did Meta was, I guess I did put credit spreads, but the last time we did it was over here at 480. So we sold 5 contracts at 480. We brought in 8,900, and then we gave back 1150, and then after that, I just messed with it with some put credit spreads. What about some put credit spreads on Meta? Because that ties up a lot of capital selling cash secured puts.
Yeah, I'm not opposed to that. Let's see if the premium, because Meta's premiums I think are generally better than the other ones because it's a bit more volatile.
And is this? Yeah, it's a 50-25er. So that's good. When are earnings and all that stuff? Sometime in February?
Is it going to be middle of February? Definitely it'll be, oh no, it's January 29th. So it'll be out. Yeah. So literally next week we have earnings.
So what are you thinking? Like the 600s? Sell the 600. Did I do that right? Sell the 600 and
buy the 590.
Buy like the 590 or so to have a bigger spread.
I don't think that's crazy.
So does the math check out or no? Because you're supposed to do 1/3 of the width or whatever option tells me, like all kinds of stuff.
We would get 20. That's what? That's 223. It's basically 22%.
So let's do the math. So you tie up 10 grand and you bring in 2,200. Y'all see how that gets 60? But then also have the capital to turn this into a bona fide cash secured put. That's what makes it more feasible for larger accounts, because there's a lot of option sellers that say that put credit spreads is a good small account strategy. Well, if you're going to play it with a small account, you need to have big knowledge, though.
I actually don't agree with that, because as good as it is for small accounts, if you get screwed, you're screwed.
You got to manage it. Yeah,
you can't manage it. You don't have the bankroll, right?
So my magical eraser is that I could just turn it into a cash secured put, and I lock in the win on the long call. Or on the long put, I'm able to lock in the win, because if this thing goes south, that long call is going to print. The short put is underwater, but I'm going to be able to turn it into a regular cash secured put and manage accordingly because I have the capital. But if you're doing this without the money to turn it into a bona fide cash secured put, you can't afford to be wrong, essentially.
Can we before we fill this one, I'm curious on the math. Can we look at 590, 580? If you sell the 590, buy the 580.
Sure. So I just got to back this one out, right? Let me just start over.
Because I wonder on put credit spreads, can we still get relatively the same return? And still
well, you go further out of the money on your short put, because that's where it's paying you the money, right?
Right.
You're not going to get as much money.
That makes sense.
Yeah, because I mean, the chances of this working out for you are, much better down here. So if they're much better, then it stands to reason they're not going to pay you as much. Now you can make more money if you go way out of the money on the short put, and then on the long put, you go further down.
Why? Why does that
create a wider spread? Because you're paying less for that insurance. Because it's going to take a lot more for that long put to print, if that makes sense.
So is that a good strategy?
I like it. I like it, especially when I'm okay converting this to a cash secured put anyway. So I'm just showing y'all different ways to squeeze juice out of the lemon. Okay. Like everybody's like, oh, you're so basic. I'm like, bro, I have tried so many option strategies that I probably invented a few that I didn't even know were there. Like, because there's only 4 things you can do. You can buy calls, sell calls, buy puts, sell puts. But you can use so many different combinations of those. Yeah. That's where it gets very complex for a lot of people, myself included.
Yeah. Dude, so
I keep it simple, get rich. You know what I mean? And that's what I chose to do. But don't think for 1 second that I'm not familiar with all this other creative shit.
Yeah.
So you go wider. You can go wider, and then now you do the math.
It's giving us the same. It's giving us basically the same.
So let's look, and we'll go.
Oh, that's incredible.
255. I did this wrong.
Yeah. That we get $10 more of a margin of safety, and we're well, we have to pay a little bit more in collateral, but I still think that's reasonable for some more safety.
Yeah, I don't even have to think about it, bro. It's a no-brainer. So hopefully it'll fill. And again, on these put credit spreads, you got to be patient, guys, because they're not like cash secured puts where they'll fill like instantly, but this one filled. And now it's like you're ringing the cash register. So to me, what I really like about put credit spreads, Amit, is that it puts a position on the radar for me while ringing the cash register. And if these put credit spreads actually get challenged, now I'm interested.
Yeah.
Like now I'm legitimately interested because I'd be totally interested in Meta at 590, knowing that I can convert it and turn it into a regular cash secured put, and then maybe roll to 575 and take ownership down there because now I'm in my wheelhouse, right?
Right.
So it puts stocks on your radar, but you don't have to commit all the capital. So chances are both Palantir and Meta, unless something really caves financially on the macros, they're both not going to be underwater, more than likely. And if they are, well, luckily there's still enough collateral to where I would be able to manage accordingly.
Yeah.
I like that one. Anything else? Because these put credit spreads are fun in a frothy market, but you do have to have the bankroll. You don't want to get over levered because I always look at, okay, it looks good. I'm ringing the cash register, but how much money did I just commit right now? It's $59,000 times 10. So that's over $500,000, right? And then whatever it was on Palantir yesterday.
Yeah, Dom says so. As long as it stays above the put you sold, you get all the credit and do not have to buy any shares. Correct. As long as Meta 100%. Is above, if it's above 590, we keep the collateral or we keep the premium, and we don't have to convert the put credit spread into a cash for put. Now, if you don't have the bankroll in Meta, let's say Meta tanks to 550, you just lost your 15 grand.
Facts.
And that's why small accounts that want to get rich quick by doing it. Like I honestly
one misstep wipes out 4 to 5 wins.
I'd rather buy leaps on a small account and go all in and hope that you're right versus do put credit spreads every month. Because if you lose the money, you lose the money. You're just done. You know? It's tough.
One more to talk about, Amit. Are you ready?
Yeah.
So I had these leaps on SOXL, directional semiconductors. And I closed them out for a profit of like 80 or 90 grand.
Wow.
Wasn't in them long. Y'all see it right here. It's all right here. So I started ringing the cash register right over here. So got 131,000, got 129,000, 129,000, and then I gave back. Got another 29,000, then I gave back 18,327. So if you add the math here, that's a lot less than the money we collected. So why did I do that a bit? Why would I do that so quickly in the game?
I think a couple reasons. A, I think you wanted to lock in a win on the semis to protect against some volatility. B, I think you had better places to put the money.
Fact. So it was 1.5 million. I gave back the 329. Y'all just saw that, right?
Yeah.
Because CleanSpark was having a bad day, and I'm actually not as familiar with CleanSpark as Ram Riot, but I'm familiar. So I was like, well, I'm going to go put that 1.5 million as a backstop trade on CleanSpark at 750. Did the exact same trade last year, made 260 grand in like 45 days. So I'm expecting that something very, very similar is going to happen again. So I brought in about $360,000. You'll see it right here. I did it all literally just the other day. So I started on, right here. So I brought in 43, 43, 43, 10, 43, 31, 43, 43, 43, 42, 443. There was 2,000 contracts. So that's one thing we weren't able to work out with Robinhood is you can only do 200 contracts at a time when you're collecting over $25 a contract. So I had to do several tranches to get the 2,000 contracts out there. It's the same 1.5 million, but I collected more premiums than I had given back. So what do you think about that move right there?
I like it. I think you got in when it was low. You got a lot of premiums from the semis. I think the semis will do well this year, but You're hedging against that, and you're going into a sector you're more familiar with, which is the miners, and you made good on it. I mean, there's nothing.
And I want to cash out at 50%, and I want there to be like 8 months left on the contract. You know what I mean?
Right.
That's the goal. So I'm just going for 50%. Now, if it drags out and things are looking good, you know, maybe I go after 75%. I don't see a world where I would write this out all the way to the end, because by that point, I'll find something else that I could do a year out that's going to bring me a lot more money on that 1.5 million in collateral. So, and it's a 15-16 delta, so it feels pretty decent, you know, feels pretty decent. I know that we would be in the beginning of the crypto winter and all of that stuff, but you also got to understand that I've already made like 300 grand on this one. So, you know, the adjusted cost basis would probably be in the $1 to $2 range. If I took ownership of all of these shares at 750, I would just turn around and sell covered calls right there at 750, but I would be able to afford to sell them at like even $6 if it really tanked, or $5 if it really tanked. So I'm in a little bit of a position there because I rang the cash register a few times on this particular ticker. And then I also have some shorter plays. I've got some covered calls expiring today, so I'm going to be able to ring the cash register yet again, starting next week, as long as it stays under 1250. Because if not, I'll lose those shares. And then I've got another 400 cash secure puts at 950 for Valentine's Day, and then I've got another 400 cash secure puts at $8 for 321. So I'm expecting to ring the cash register to realize all of that money there, which gives me even another buffer to be able to stay in these a lot longer. So I just feel like it's going to be very, very difficult for them to squeeze me out of that position. So now the question becomes, why didn't you just do it on Riot? Because the premiums on Riot weren't nearly as good because Riot's run up so much.
Right.
So I couldn't. If Riot were to tank to like 8, I would love to switch all of this money over to Riot and write out like 5,000 contracts, and I'm in it for the next 4 or 5 years with Riot while we get through the next cycle, because Riot's going through a pivot right now. I don't know how it's all going to work out. I don't have a crystal ball, but I do think that they're going to come out at the other side of these things looking real good with the big fat check to back them, because I do think they'll get in bed with a hyperscale.
Right. I think it's good, dude. I think it's a good strategy. There are some other stocks people are mentioning, ServiceNow, VRT. I think those we would have to do a little bit more deep diving into. But for the semis, you kind of have some of that exposure already with SOXL. And the other ones, ServiceNow, I mean, the other SaaS names, I think Palantir is just a little bit of a better play because you know it a lot better. But these are your 10 horses. And I know you said there will be like 5 horses by the end of the year, and I like it. I think these are.
Yeah, because these are all swing trades right here. CleanSpark, Marathon's a swing trade and phase. But I did set up this one finally, Amit. Let's end on this one. I got the 2,000 shares at 69, so I'm down a little bit on the shares. I'm running the strangle. I've got cash secure puts at 60, cover calls at 75, so I'm bringing in about $9,000 a month now, almost 10 on the covered strangle. So it wouldn't take me that long to own these shares at no charge. And at 69, I feel like maybe I didn't get the best entry point, but I did okay. I don't. Where do you think the floor is with this company? I mean, I could see a world where it could maybe go to the 40s, but I really think that somewhere in the 50s it just gets gobbled up.
Yeah, I think unless they mess up the earnings, this 58 to 65 has to be the bottom. I think they would have to really show the world that solar is dying as a industry, which it's not. You know, so
yeah.
No.
So I got to run, dude. My wife's saying we're going to go eat lunch, and I still haven't done.
Are you coming to New York in a month or a week?
Yes. I'll be there from the 2nd through the 7th, celebrating my 50th birthday.
Okay, so I'll hit you up.
I was gonna ask you because Kristen doesn't want to do it, so I feel like I'm asking you out on a little bit of a date right now. It's kind of weird. I'm gonna do the helicopter tour.
Dude,
we did one in Vegas, and Kristen's like, no, fuck no, not interested. These things look like they're old medic transports, and we're just going to be another patient. So I've looked at it into a company that has like real nice helicopters. Have you done the helicopter tour of the city?
No,
I did it a long time ago. It's pretty cool.
I've heard about it. I've never done it.
It's only like 15 minutes, and it's relatively inexpensive. And I thought that'd be real cool, and we could kind of like shoot the shit. Maybe you can go live on your channel, even if I assume there's signal up there because we're only about 1,100 feet.
What date are you thinking? You're thinking next Saturday, February 8th?
somewhere along the way. It's only a 20-30 minute deal. But I know it takes you by train, 20-30 minutes to get into the city. I don't know if you want to drive in all that traffic.
No, it takes me an hour on the train, which is easy. We'll talk about it. I want to see if you can come over to my house, but it might be too hard for you to spend that much time away from.
My wife wants to do some things that I'm not interested in, like shopping and stuff. So I might have a window there where I'm able to get away. And then I'm doing the little the Wall Street walking tour, and I'm pretty sure she's not going to go with me on that.
Yeah, she's not.
She don't give a shit about the bull and the balls and all that stuff, and the sycamore tree, and she doesn't give a shit. So
let's plan.
I'm nerdy. Like I like to know about the history and how this beautiful country founded the New York Stock Exchange 16 years after its inception, and those things just like I'm cool with it like that.
Dude, let's plan a little date. Let's do it. It'll be fun.
So I think it'd be cool. Maybe we can go live and and do that whole deal.
Well, if you come to my house, it'd be easy to go live. I don't know if we can go live on the helicopter. I mean, we could try, but if you come to the studio, it'll be super easy to just talk.
Yeah.
And chill. It could be a chill stream too. We don't have to
rat you out a minute. I ain't like Crossroads. I'm gonna tell them if that shit is real or not, bro. On the bricks, so you gotta let me know, bro. You gotta let me know. We're full transparency on this channel, man.
You can't mess up what everyone has already affirmed, which is that the bricks are freaking real. Okay, can't do that.
Okay, what the hell? I've never heard of this one. Go ahead.
Ablacate? What the fuck is this?
Ablacate.
No one knows what this word means. No one in the chat. There's no way you guys can tell me to wean. What does wean mean? What does that mean? The parents decided to ablacate their twins. What?
It's when you take the kid off of the boobies. You take the little weanling. They call them weanlings on the farm. I grew up on a farm.
Oh, so you knew kind of what this means.
I don't know what the word means, but I know what it is to wean a baby calf or a filly or a foal or whatever. Yeah.
Oh, because lactate, milk. Makes sense. Makes sense. There you go. I don't know how the hell we're gonna use that word in a sentence, but
I think I do my best to give you guys all the information and knowledge necessary to sell puts, sell calls, and collect premium. But at some point, you will have to ablactate from my titties and learn how to do it on your own.
That's how we end the segment.
Guys, I gotta go. Am I doing better? I'm not cursing nearly as much, by the way. Am I doing better on that or no?
You're doing a lot better.
Cleansing that I've gone through. It is the cleansing. And dude, I don't know if y'all love the F-bomb as much as I do. I think it's a very useful word, but I will tell you that my energy just feels better because I'm down to probably 3 F-bombs on a daily basis. And I save them for just the right time, bro. Just the right time. It was overused. Now it's it really hits, kind of I'm only drinking 1 soda every other day right now. And bro, it goes down so hard, it scrapes your throat. Definitely giving me throat cancer. I mean, this thing is just going down because I'm trying to quit sodas as well.
Yeah.
So anyway, it's just one of those things that I'm turning a new leaf. I'm turning 50, bro. I think one day I might be a grandpa. I feel like grandpa needs to set a good little standard for a little mini Will Joe down the road. I don't know.
I love it. No, you're crushing it. You're killing it. TJ's Twitter is killing it. YouTube's killing it. There's his YouTube right there. I'll put his Twitter in the chat as well. And dude, we'll connect in 2 weeks. We'll see each other in the city. It'll be great.
Appreciate you guys. Take care. God bless you guys.
Appreciate you, TJ. That's his Twitter. I'll see you next week.
Take care, my man.
Bye, TJ.